Welcome to the Federal Milk Marketing Order 33 update. This is Dr. Lawrence Jones, and I'm recording this on November 21st, 2022. And this program is brought to you by Nobis Agri Science and Volchem. So if we start with the statistical uniform price for Order 33, it came out at $22.99, which was actually up about 35 cents from last month. And if we kind of look at this in a little bit of a history here, drew this red line, which would be kind of the high, going back to 2019. And so this has been just a really nice run up, and looks like it is kind of trending down here at this point. Now, one of the things that's driving your milk price is what we call depooling. And depooling occurs anytime that one class is more valuable than another. And we can kind of see it here. Here are your historical numbers for percent. So class 1 is normally 35, and it's 39.4, which would make sense if we're pulling out class 4. And class 4 went from 20% down to 1.2. So basically, Order 33 had no class 4 in the pool. I mean, it's still there and it's still made and still used, but it doesn't come into the pool. So if we look at how uniform prices changed across the country, again, you guys were plus 35 cents. Now, one of the things that drives that is the actual difference in prices. So class 1 went down, class 3 came up, class 4 was up just a little bit. But if we look at that class 1, these southeast areas which are very, very high class 1, all came down. They were fairly negative. Northeast was pretty well flat because it's a combination of the both. And if you look at Minnesota, Wisconsin, your neighbors to the west, they're up $1.75 because they're 90 some odd percent class 3, and class 3 came up that $1.99. So let's talk about pooling milk for just a minute. I've covered this in some previous podcasts, but we'll do it again. So whenever milk is shipped and it goes into a pooled plant, all of that milk then goes back to the federal government. They calculate your price, and that's where they come up with that $22.91, and everybody's going to get the same price. Now, when a milk handler actually is depooling milk, what they do is they take that milk, and instead of sending it through the federal system, they send it to, in this case, like a butter plant, because they're depooling class 4. And then that money comes directly back to the handler, and then that money goes directly back to the producer. So this is a separate check that is separate from your actual milk check that comes out with the class and component numbers on it. The impact of depooling, which everybody kind of talks about it as a really great thing, but it's not such a good thing because it actually lowers your PPD. And so if you have dairies that do not have the ability to depool because their handlers are not depooling, then they get the negative part of that lower PPD, whereas the other producers will get the separate check, because of their depooled milk. And you can see depooling happens anytime when there's kind of a big difference between 3 and 4. So right now, class 4 is clear up above $23. Class 3 is down here at 21. And we're going to look at this graph here in a little bit for another reason. But basically, starting in December, these do not deviate, very much at all. So you're not going to have any depooling after December, because the rule of thumb is there needs to be a 75 cent difference between 3 and 4 for depooling. And so again, right now, class 4 is much higher than class 3. But as soon as we get into December and looking all the way out to October of next year, we're in this negative 75 to plus 75 range. So I expect depooling to basically stop unless the market severely changes here in the near future. Now, one of the things that is just really astonishing to me as I looked at all these different federal orders is what you guys did with percent fat. So for this last month, you were at 4.08. A year ago, you're 3.93, so up significantly. And if we look across the nation, weighted for the amount of milk in each order, the fat was at 4.11%, and that's up 1% month over month. But I mean, look at some of these numbers. In upper Northwest, 4.36%. Even Florida, which struggles with butterfats, 3.75, which is really unusual for them. So you guys are 408, very similar in the Northeast. Not vastly different here in Minnesota, Wisconsin, and in the midsection here. There's no surprise that fat was up because fat price was $3.66. Again, this is just kind of gone up significantly. However, we do expect this to be trending down and probably below $3 here in the next couple months. Now let's take a look at protein, kind of the same thing, but not to the same extent. You guys are 328. A year ago, you were 322, so up a little bit. And we look across the nation now. Some areas don't report protein. The entire Southeast doesn't report any protein numbers. But again, you're 328. Again, upper Northwest, 346, Texas, 336, some very high protein numbers, California, 334. Protein hasn't been as valuable as fat. We had a high of 387 back here in about May, we're down to $1.88 back here in September. We've come up a little bit. We're probably going to come above $3 for a while, but I would expect that to drop down to that $3 range, by the first of the year, somewhere in there. So if we kind of summarize this part here, statistical uniform prices increased slightly, and it was kind of a nice surprise. There is a lot of deep pooling, so we're going to see some really strange things when we go to analyze this next month. Components are very strong, and so, we might say milk production is not increasing across the nation, but, amount of fat and protein being produced is going up significantly, and fat is worth more than protein at this point. So as I went to record this, the new USDA milk production data came out, so I delayed and got this included. So this is the data that was just released this afternoon. Cow numbers came in at 94.18, and that was a revision from last month a little bit. And so we're going to say that we're up from last year at 93.87, but I'm going to argue that we're still historically high in cow numbers. I like to ignore this kind of spike up in cow numbers. And so if we look back, to 2015, we are historically reasonably high in cow numbers. And the thing that's really driving milk production is this milk per cow. And again, it's very cyclical. We have actually the lowest production here in October. So this is the trend of all the Octobers, back a while. And we did ignore this one here because it was an outlier. But, very, very close to trend line on production. And right now, production's increasing at an annual growth about 1.1%. And so I was also able to update the slaughter numbers. And so for the week ending November 7th, which is the last week we killed 60,000 dairy cows. This is a kind of an area that I keep an eye on from 55 up to about 62 on a weekly basis. And we're just kind of in that area. We were below it a little bit back in early summer, and that's when the herd was growing a little bit. And of course, we were above it, in the early part of the year, and the herd was shrinking at that point. But what I like to do with this is actually put it into a percentage number. And so with having the milk production report today, I was able to do that. And so here are the last few numbers, and we're right in that 33% call rate. So again, I don't expect the herd to change significantly. Most herds that I look at are, 32, 33, 8, 9% deads. That puts you right at 40%. They've got a 0.8 heifer to cow ratio and just kind of keeping herd size stable. And I expect the same thing on the national herd. Quick look at what's going on around the world. This is the global dairy trade. This last week we were up 2.4. So we'd been down for 4 sessions, and then finally we had a little blip up. And again, we can see cheddar was down 1.3, butter was down a little bit, skim milk powder, which is the proxy for non-fat dry milk. But let's go ahead and put these into what I call US numbers. And so this is the last session here. Butter and cheddar were about, $2.15 a pound. They were down a little bit. Non-fat dry milk around $1.48, and then whole milk powder at $1.54. And the importance of that is that usually we can multiply that by 10 because there's about 10% solids in milk and get what the world price is for whole milk powder, and it's around $15.42. So we're not going to participate in that market in the U.S. with the kind of prices that we have. But if you take these butter and cheddar numbers and put them into the class 3, we're around 21.44, and it supports that at about 19.62. So you can see class 4 is much lower than class 3 on the world market. And for a 50-50 blend, around $20.53. Kind of look at the spot market here, and this is my statistical control chart for spot cheese. The blue dots are the individual spot markets, and then the red lines are what I'm trying to fit trends to these, and the green lines just happen to be demarcations of months. So we were going up significantly, we kind of stalled out, we went down, we went back up, we tested, this like 220 number, we came off of it, and then we started back up again. Then we've had this big run here, the last 5, 6, 8 days. But at this point, this is actually headed back down. So I don't expect us to stay up in that, 215, 218 range for very long. It's going to probably come down and test this $2 number again, is what I would kind of expect the spot market to do. And if we look at the cheese futures, they're just a little bit above that, so like 205 all the way through. There is a spike here in December, and I usually comment that probably won't hold. There's not a good reason for cheese to just spike up unless it's a lot of holiday sales, but that's going to happen more in November than in December. And if we look at protein prices, protein's going to follow cheese pretty heavily. We're going to come off and settle in at this $3 level for protein. But look at these numbers up here. This is crazy. You could have actually booked protein at $6 a pound at some point in the last 24 months. And that was just some crazy numbers. So the class 3 is driven largely by cheese. So you're going to see this blip in the class 3, the same blip that's in cheese. These are the lows that we've had in these contracts. These are the highs. So we've just definitely kind of coming into this 2021 numbers where I think we're going to settle here for the next 6, 8 months. Non-fat dry milk is the major part of class 4, and this is about the same graph, but on non-fat dry milk, it's driven largely by, the global trade. So this blue line here is the global dairy trade with a 20-cent premium kind of built into it. So you can see at times, we're significantly under the international price, but right now we're flirting with the international price pretty close, and that's a pretty good trend line. And so it's going to be interesting of whether we can keep that up or whether we're going to come down here to, kind of 20 cents below the global market. And the reason there's about a 20-cent difference most of the time is that's what it takes to actually ship it across the, the ocean and get it onto the international market. And if we look at the futures contracts, they're in that $1.40, $1.45 range for non-fat dry milk. Again, you could have booked these clear up here in the $1.80 at some point. That was just a crazy high number. And we look at the class 4 futures. It's also coming down. We're going to be, driving this down to around 21 by the first of the year. And I went ahead and plotted these together. That's the same graph that we saw before, but we'll look at it from a different reason now. And that is starting in December, both of these are going to be coming down to about March and then settling out in that 20 and a half kind of number. So we'll just summarize this part real quick. Cow numbers, I believe, are stable, and I think even the stuff that came out today would say that they're they're not rising or falling significantly. And milk prices are trending down. Any way you look at it, by the first of the year, we're probably going to pull $1 to $2 off of these milk prices. We'll kind of move into a little bit of crops and bigger picture sort of things. Again, this is a graph. I actually send this out every night. If you're interested in it, you can send me an email. And soybeans are in that 296. This is the next 12 months together, so I don't ever look at anything real close. It's just kind of the average of the 12. And corn's at 232. I built the index, which is 8 pounds of cornmeal, 8 pounds of corn, just to kind of give us a off-farm kind of index, and that's at 252. Our class 3 and class 4 is at 2041 for the next 12 months. Class 4 is at 2097, and the 50-50 blend is at 2071. And we look at these grain numbers. Corn has just been in this 220, 240 range for quite a while. We dropped below it for just a little while back here in July, but we just seem to not be able to break out of that, and it's about right where we are in the middle of it at this point. Meanwhile, soybean meal just has not dropped below this 390 number. It tested it several times. It tried to go above it, and it just has not been able to break out of that 390, 410. This might have some real legs under it, so you're going to have to keep an eye on soybean meal. And the reason is this Argentinian drought is just getting pretty severe, and it looks like there might be a shortage of beans coming out of Argentina. But Brazil is going to be planting a record crop, so we're not quite sure what's going to go on with this bean price. It's more kind of wait and see. If we look at our 50-50 blend price, I put in a line. I know that the guys that are always looking at charts call this kind of an overhead resistance line. And we've just been bumping this and coming down off of it all the way since back here in June sometime. I think it was June 8th that had the highest price there. But we're down in this 2021 range at this point. So this is the dairy margin, which is a 50-50 blend minus that corn bean meal index. And again, this is not the total dairy margin. I get that. It's just meant to say, with what's moving in the market, how is the market moving for you or against you? And here we were up to 1650 back here in June, and we're in this 14. We've been as low as 1350. So the margins are down from where they were in June, and they're a little better than they have been. But if this milk starts kind of trending down here, this is going to get a little tighter. And a couple of things I covered last time was the U.S. dollar index, because I think when we talked last month, it was about $1.11, and it really came down to $1.07, and it's kind of trending up here just a little bit. The U.S. dollar index is extremely important for exports, and when it's clear up at that 113 in there, it makes it very, very difficult to send our products overseas because we have to pay for them in U.S. dollars. And the one that is kind of driving kind of the overall commodity market right now is oil, and this is the February contract. And as I was putting this together today, it dropped clear down to 75. Now tonight it's back up into the 80, 81 range. But as oil moves, so does corn, and so does soybean oil. Oil comes under a lot of pressure. Corn is going to drop, and so it's always good to keep an eye on that. One of the things that's getting a lot of discussion right now is the drought monitor, because this is really red in the southern plains. That's the big wheat area, but wheat was kind of under pressure right now also, so there's some rains coming out there. But it looks like the eastern part of Michigan is also relatively dry and included in this drought situation. And if we look at how things change, over the last week, we picked up a lot of moisture in here from that hurricane, but did look like Michigan got a little bit drier, in a few spots there. If we look at the next 8 to 10 days, right now we're in this kind of a scenario where we're going to move into wintertime forecast, and it gets a little bit precarious, but Right now they're expecting higher temperatures, and it looks like west and in the plains area. Michigan should be, fairly normal, and then we're going to be drier in the east, a little bit wetter in the west, and Michigan should be fairly normal or a bit drier. So the summary of this section, the grain prices have been stable. Corn really hasn't moved significantly. Some people call it the EKG of a rock. Drought concerns are really, hitting the news every day, and that includes both the southern plains and, Argentina. And then the U.S. dollar is weakening, which is good for exports. So that's my summary of the federal milk marketing order, and I hope that gives you kind of an idea of what's going on. I do think milk prices are going to come under a little bit of pressure here, so we just have to keep an eye on that, and hopefully everybody's kind of locked in some prices. I've got several farms that have actually locked in about $23, $24 mailbox for all of 2023, and that was a very good move when they did that. If you have any questions, feel free to give me a call or send me an email. Please enjoy, Thanksgiving and spend time with the family, and I hope everybody has a great week.